This is the speculator at Take Your Profits, and I'm going into another round of post-trade operations here, analyzing my trade decisions and reviewing and analyzing the actions that led to those decisions and the results and the production produced by those decisions. This trade we're going to be looking at today is trade number 89. Trade number 89 was a trade in the US dollar Japanese yen market. It was a long entry. Sometime last week, I could give you an exact date in a second, but it was a long entry in the US dollar Japanese yen market, and as part of my post-trade operations, I have to ask myself two questions, and first question is, did everything go as planned? And in order to find out whether or not everything went as planned, we'd have to go and look at my specially designed Pro Trader dashboard here, and it did turn out to be a winner, this trade. And let's just go into the definition of it real quick. Yeah, here we go. This trade was taken last week Tuesday, September 20th. In case you can't see that, last week Tuesday, September 20th, 2201. That's 10:01 p.m. So that was in the Asian session, and that closed out a few days later. It was a two-day long trade. It was a long entry decided on a 4-hour chart. Trade number 89 did turn out to be a win. It did turn out as expected. And as you all know, the US dollar Japanese yen market trades on a 2-decimal minimum fluctuating variable. Here was my set strategy, my stops, entries, and targets. We'll look at that graphically on the charts in a second, but my protective stops were at 75.85. It was a half. The position size was suggested at half a position based on my money management parameters. The entry was at 76.35. The first target was at 76.90. Looks like I hit first target, and the remaining contracts were taken out at break even for a 55 pip win. Here we go, it's a 55 pip win to add to the 6,000 or so pips I've taken from the market this year. And going into the defined characteristics of the trade, so like this. The risk profile was a 1.1. The money management rules mathematically suggested a half a position size on this trade based on the combined technical score of 9. Defining my risk parameters mathematically. The trade scored points for being at an MAS level or a major level of structure, scored points for ratio confirmation and higher time frame confirmation as well. As you can see, historically across my trading experiences, each one of these three trading technical strategies have been profitable monetarily. The percentages in which I'm actually getting base hits, if you will, are 38 38.6% for major structure, 39% for ratio confirmation, and 41% for higher time frame confirmation, for an average monetary gain of about, I would say, somewhere about $4,000 or $5,000 and each of them on average have somewhere, say, about a 1.5 profit ratio respectively. But they did score points for being at those 3 technical levels, as well as for scoring points for an ABCD harmonic pattern with a 618 retracement, which has been shown to be 40% winner and profitable by $3,300. And the trade also scored for showing a butterfly pattern towards the end of the price movement, which has historically been a 60% winner with $1,000 gains at a 2.2 risk profile. The overall profile score for this particular trading strategy, it scored a weighted win percentage of 68% with a 2-to-1 win-loss ratio, and total gains for the year for this strategy being about $500. So this trade was successful. It did turn out as planned. Okay, did continue to add to my equity gains, and it did turn out to be the second or third consecutive win in the most recent series of trades. Going into the trade graphically, so the actual price levels could be seen as were defined when I took the trade. You can see this is the overall butterfly pattern here that I based my major trade decision off of. Here's X to A to B, B to C, C to D. I took the trade on or about the point D completion. Here at 76.35 was my entry. My protective stop was about 2 or 3. I've been realizing lately that once I defaulted to structure, there was probably previous structure here in which I defaulted this protective stop at. Once I looked out to the left here of price, I think the previous structure might have been the low when the event of the hurricane had happened, or I'm sorry, the typhoon and the earthquakes in Japan had happened. So I wanted my protective stops to be below that price level, but what I've been realizing lately is once I default my stops to structure after calculating a 2 ATR stop loss, I've been realizing my stop losses the initial stop losses anyways, are turning out to be closer to 3 ATRs, which is fine, but I do try to stick to a 2 ATR stop loss. Here was my entry. My targets were, my first profit target was at 76.90, which was here, defaulted to structure above the 382 retracement. And my second profit targets were a 127.2% extension of the X to A leg, and that profit target too was at 78, I think 18 if I'm not mistaken, just below that 127.2% extension. So yeah, this is a variation of my profit taking strategy. I'm experimenting again with it's been successful actually lately with these last series of trades, but that's because the trade decisions themselves have been a little bit better as well. So that's why I've been able to take these targets where I have been instead of the typical 382.50 and 618. What I'm realizing is the riskier the trade entry is, the more I would have to adhere to this 382.50, 618 profit taking strategy. The more well defined and cleaner cut the Gartley or butterfly patterns look, the more I can gear myself towards the 618 127.2 profit taking strategy that I still have yet to define on my ROE video series. Let me make a note of that. Define 618 and 127.2 profit taking. It's funny. I don't know. Oh well. Strategy. There we go. Okay, so again, the targets were there at just shy of my 50% retracement and just shy of the 127.2 extension of the XA leg. And going into what actually happened, we can see that profit target 1 was achieved. Yep, profit target 1 was achieved, and that allowed me to move my stops to break even, and then the market reversed, taking me out at break even. However, this trade was a winner. So going into the second question, which is what is it here? Actually, let's see what is it exactly that I have written down. Is what can I improve and what steps will I take for improvement? Well, the improvement here lies in the consistent approach I've been taking towards executing these trades, looking for more clearly defined Gartleys and butterflies. I got to remind myself that I got to score the trade a Gartley when the AB retraces to either the 50 or the 618 of XA, and I have to grade the trade a butterfly if the AB leg retraces to the 786 of the XA impulse leg. Now that's where my improvement is going to lie, is in remaining consistent and grading these trade opportunities objectively and adhering to that those rules of engagement objectively, so that way I can succeed and continue to turn these consistent profits. But in this particular trade, I think I executed it pretty well, considering that once my first profit targets were taken, I did roll my stops to break even, and there's really nothing I can do if the market decides to turn around after achieving a profit target. That's the whole reason why my strategy is the way that it is, so that I could at least take small profits in sideways markets or volatile markets where the direction is a little bit more difficult to decipher. However, considering that I did trade this particular butterfly pattern at the end of a downward trend here in the dollar Japanese yen market, you know, again, my success here is going to remain at the consistent execution of these trades, which the very next trade is going to show my lack of consistency, considering that it was a loss. But you know, I have to stay consistent in objectively grading these opportunities. You know, I have to measure from the clear-cut lows and the clear-cut highs, as can be seen here. You know, no subjectivity in the points in which I measure from, which are the new structure highs and new structure lows, and where I set my stops at. So you know, there's not much I can do when I take profits and the market decides to not let me participate in any further profits. But that's why I'm here, to protect my capital with my protective stops. This is another trade experience brought to you by The Speculator. Thanks for listening. Don't forget, take your profits.